Alright guys, welcome back to another episode of Sensible Investing. Jesse here, and today we've got an absolutely content-packed episode, right? So this is update number 2 of my $150,000 stock portfolio journey. And so today I've got quite a bit of updates to share with you, as I have been doing a little bit of rebalancing in my portfolio. And so today we're going to be talking about Pinterest, we're going to be talking about Google, we're going to be talking about Weight Watchers, we're going to be talking about Dave & Buster's, we're going to be talking about Super Retail, one of my other holdings, well not anymore, Core Civic, and I'll explain why, and then we're going to go through a general portfolio update, okay guys? So lots of content to get through, so smash that like button and share the video if you enjoyed it and found it useful. Alright guys, so the first little update I wanted to share with you guys is, as you guys can see here, I have, throughout the course of this week, sold my position in both Pinterest and Google. Alright guys, so based on the buy and sell prices, I made just about a little bit over 45% on Pinterest, and on Google a little bit over 35%, okay guys? So the rationale for me selling these companies, and it's not to say that they're not good companies, in fact I think they're fantastic companies and they'll continue to do well, but I believe that in terms of how much that they have run up, my money could be better deployed into another stock that is very, very beaten up, but still has the same potential and is still a very, very good company that will return, I guess, a better rate of return over some time, okay guys? And that's not to say that, you know, if you left your money in there, they won't compound, because Pinterest, the user base is growing, the international ARPU is growing, Google, it'll always be growing, okay guys? So simply, it's just for me to find a better rate of return elsewhere. And so that's the reason why I sold these two companies. Alright guys, and if you're curious as to what platform I'm using and what broker I'm using to build this 150k portfolio, it's none other than Hatch, who have kindly decided to sponsor today's video, guys. And as you guys know, I'm really bullish on Hatch. They're a really cool broker, and the fees are very, very good, okay? So this is, in my opinion, probably some of the best that you'll get in New Zealand. I mean, $3 USD a trade compared to what the banks are charging, and then also you get a great exchange rate on your money. So if you want to join me on the journey, you can deposit $100 and get $10 free credit. So $100 or more gets you $10 free credit, and I'll leave a link in the description below. And also guys, as you know, we've got a really cool group in Facebook, right? So we've got just a little bit over 4,500 investors where we regularly discuss stock ideas, you know, give each other critique on our picks. It's a really cool group, guys, so, you know, feel free to look for that in the Facebook groups. I'll leave a link in the description below as well, and yeah, hope you can join me there and follow my journey and also some of the ideas that I discussed in the Hatch Investor Group. Alright guys, so the reason why I'm sharing this picture with you, the retail sales picture, is because at the moment, as you may recall, I've sold out of my internet stocks, and I'm currently in the process of looking at sectors like the retail sector, the I guess the beat up industrial sector, perhaps even the food service sector. And what I'm really looking for are stocks that are still very, very beat up, that have not rallied, that will do well and have a great business model, and they're doing better than all of their peers, okay guys? So what I'm looking for are stocks like the sleeper stock that'll benefit from the pent up demand, and then people coming back, you know, getting tired of lockdown, spending lots of money, okay guys? So another example that I can give you is if you look at, you know, RV stocks, right? They're through the roof and they're near 1 year, 2 year highs. And that's what I mean. So I'm looking for stocks that'll benefit from this pent-up demand and people going out to be spending money. Now, obviously, they can't travel internationally, which means that they will be spending even more domestically, okay, guys? So this is my next, I guess, 3 to 6 months looking for stocks like that that'll rally a large amount in a short amount of time. And so a really good example of a sleeper stock that I'm very bullish on, and I'll continue to be adding to my position leading up to the next 2 calls, is Weight Watchers, okay guys? So as you guys can see here, they've been quite a beneficiary of the lockdowns, because during the lockdowns, nobody couldn't do anything fitness related, while the Weight Watchers app, that was going very strong, okay? And as you guys can see, now the lockdowns are over, their new signups are trending far ahead in terms of what they predicted, and also comparable to last year. And again, that's just due to all the people that have fallen behind on their fitness goals and their wellness goals, and now people are being signed up, okay? So in terms of their studio business, that's obviously still going to struggle as the lockdowns start to ease and they gradually begin to reopen. But the good thing about Weight Watchers is because of the digital model, their costs are like this, no matter how many extra people they sign up, but then their revenues and profits go like this, right? So the operating leverage is really good. And whenever I see a stock rally about 20 odd % on the back of some news like this, and then to lose it all, what this really shows me is that the market doesn't really understand how this business model works and doesn't really understand, what they're buying and what they're selling, okay, guys? And whenever I see this amount of volatility where good news sends a stock up 20%, just for the stock to lose it all in the next 4 days because of irrational fears about a second wave or, what if the government runs out of stimulus, this to me is an absolutely wonderful candidate for a sleeper stock, okay, guys? So as it goes down a little bit more, I will definitely be looking to add and build my position in Weight Watchers leading up to the next 2-3 calls, because I just genuinely believe that there are so many tailwinds going for this company that people aren't really appreciating that should see this company back at least $35-40, if not more, okay, guys? So we'll just have to see how that turns out. All right, guys, so the next stock that I wanted to talk to you about is the Super Retail Group, and as you guys can see over here, they released a trading update, and the update was phenomenal, but unfortunately they had to do a capital raising, and as a result, the market price at that time was about $8.50, and the capital raising is $7.19, okay? And so there were a lot of existing holders that had panicked, and they said, oh, look, this is not good, this is going to go down to under $7, and I posted on one of the Australian stock trading forums, and I said, look, most retail companies are down, we're talking 30 to 50% in sales, and Super Retail is only down 12% with a couple of other segments. This is definitely going to be something that'll pop on the update, okay? And as predicted, guys, the next day the stock popped about 10%. So I was seeing if it would, continue popping, but it didn't. So what I did was I decided to then get out of the stock, and I sold out. So look, that's a really nice gain of just under 75%. And the good thing is, because I was registered as a holder before the date that the announcement came out, it still allows me to participate in the share purchase plan, albeit I won't get much, right? Because it's a 1-to-7 plan. But the good thing is I can still participate in that if I want, depending on where the market price is. They'll issue the shares, and then, I could sell it, okay, guys? So I've got another 2 or 3 weeks to decide whether I want to participate in that. But as you guys can see on the stock price chart, it's sort of already lost momentum. So what that showed me was it was a lovely report. Very, very strong sales, but it pretty much rallied up to before the Corona crash levels. So again, what this tells me is that the market's probably already priced in this good report, and hence the sort of, the share price couldn't sustain the momentum. But I'll see how the things go over the next few days. If it does pop back up to, say, over $8.20, $8.30, then I will still participate in the share price purchase, get my allotment, and then sell that off at the market price whenever they're issued, okay? All right, guys, so the next stock that I wanted to talk to you about is a stock that I ate a loss on, unfortunately, but, as and when your investment thesis changes, you have to then just not be emotional, right? And so CoreCivic, as you guys know, I did a video a while back. This is a private prison. I was very bullish on it, and I was very bullish on the private prison industry. However, they have actually decided to cut their dividends, because the whole coronavirus was a bit of a black swan, okay? And they didn't see this coming. So, as you guys can see here, I ate about so the dollar loss wasn't much, right? But the percentage loss was quite a bit. So it did hurt, but we have to remember not to be emotional when we buy stocks. We have to buy on the thesis, and if the thesis changes, then we have to also be unemotional, right? So don't fall in love with your stock, guys. So, look, and the lesson here with CoreCivic was that this could have actually been avoided, okay? This loss could have been avoided. So the lesson that I want you guys to take away from my mistake is, even if you're bullish on the company, and even if you like them, always treat whatever the information, new information that you get, as somebody reading the company who has never ever read this before, okay, guys? And this mistake could have easily been avoided. And I know some of you guys can say, well, look, they've still got good assets. If you're bullish on the prison industry, why have you changed, okay, guys? But one of my investment long thesis for CoreCivic was that it'll keep paying a good dividend. And now that it's no longer paying the dividend, it's kind of like going to a Chinese takeaway and not ordering Chinese food, okay, guys? It just doesn't work. And what we're going to do is we're going to go through the postmortem to show you where and how I made the mistake and how you guys can avoid doing this from now on, okay? So I want us to focus on the second paragraph, because this is where the Core Civic earnings call very much differed from their peer, the GEO Group, okay? And this could have easily helped me foresee that the dividend was going to be cut. So as you guys can see here, the CEO said he would like to make a brief note on the dividend, okay? It's 15%, and the declaration is a board decision. We meet with our board frequently to decide, what we're going to do with this. We're in the middle of a pandemic, and the next dividend would, typically be payable in June. Therefore, we've got more than a month to just decide what we're going to do in this. And interestingly enough, because I didn't pay enough attention when reading this, it kind of slipped my mind. And even more interesting, not a single analyst asked on the Core Civic earnings call whether the dividend was safe, okay, guys? And if that's not enough evidence, you could have gone and read the comments. And as you guys can see over here, even some of the different users had picked it up when reading the comments on the call, okay, guys? So, there were, so not just one thing pointing, but the second thing, and if that's not enough, you could have gone back and actually compared how Core Civic pays their dividend, okay, guys? And so if we compare in the past, you'll typically notice that within about a week or two of them releasing their report, they will typically declare a dividend, okay? And it had been well over 3 weeks, as you can see by historic habits of how management declared dividend, that the dividend wasn't declared. And so there was still time to get out, but again, carelessness cost me. And if you compare that with the GEO Group over here, as you guys can see here, now the good thing with GEO is, because I'm still holding GEO, I haven't sold, they typically lead with the dividend, then declare the report, okay, guys? So if around this time, which is typically the next month, around the middle of July, if by, say, around the 9th of July, over here, sort of that, give or take a few days, if they still haven't declared the dividend, then I'm going to get out of the GEO Group, okay, guys? But I just wanted to take you through why I think the GEO Group's dividend is safe. And the reason being is because, as you guys can see over here, on the GEO Group call, that was night and day, okay? So management never mentioned potentially reconsidering the dividends, and also there was an analyst who specifically spent a good 5-10 minutes actually asking about the dividend. And as you guys can see over here, the CEO said, look, our dividend is safe. We're going to do different roadshows and investor presentations, and we're going to be talking about our dividends, etc., etc. Okay, guys? And so, now, obviously you can say, well, look, management is lying and they might remove it, okay? And that is a possibility, okay, guys? But I'm just not that sure that they would go on a publicly recorded conference call to say it's safe and then, remove it, right? The amount of lawsuits that would follow is absolutely insane. And the private prison industry get a lot of lawsuits, so I don't think they need any more. Okay, guys, the next stock that I wanted to quickly talk to you about is Dave & Buster's, okay? And the takeaway here that I wanted to share with you is how important it is to actually go through and go onto a spreadsheet and then put all of the different key metrics of the company over the last 5 years next to each other, guys, okay? So if you aren't doing this and you're building your portfolio, I really recommend that this is an important step that you take as part of your research process. And the reason why I think that's important, guys, is because, I was looking at Dave & Buster's as a potential recovery stock in the food services and entertainment sector. And the numbers, the headline, the high-level numbers were good. The earnings calls were looking good. Everything was looking good, okay, guys? But remember, management lie, numbers don't. And so after I plotted that over here, as you guys can see over here, sometime in the middle of 2017 to late 2017, their business started deteriorating, okay? And what I can tell here is that the company has started to rely on an opening of new stores as the comp stores were falling off. So what this tells me is that patrons that used to go there, they aren't coming back. And so what management are doing is they're taking a smoke and mirrors approach to try and mask that by, spending more money opening new stores. But the problem with that is that your revenue is going up, but your profit's going down. That's unsustainable, and it'll eventually break the company. Okay, guys. And so, as you guys can see over here, it's very important to plot the comps. If you're looking at anything to do with consumer discretionary, don't just look at the actual headline revenue growth numbers. Look at the like-for-like comparable numbers with the comparable period last year, okay, guys? And you'll get some really, really good insights that, just reading the calls without doing it side-to-side won't tell you. Alright, guys, and then final thing, I just wanted to let you know that I've added another 12-odd K to my account. I've opened a position in PVH, but I'm not going to talk about that today because I've still got a little bit more digging to get through before I talk about that, okay, guys? But the main thesis is that I think that they've got some strong brands, and that should, in theory, survive, all right? Now, just to show you where my account is today, guys, as you guys can see here, it's slowly getting to 150. It's currently sort of, 66.5K at the moment, and here's the current stocks that I hold. So as you guys can see, I've done a bit of chopping and changing. What I'm doing at the moment is I'm in the process of looking at different companies and sectors that have severely lagged the indexes and the benchmark indexes and their peers, okay? So what I've been doing is I've been tracking the price movement of the different indexes since the Corona crash. And what I'm also doing is I'm plotting stocks that have, severely underperformed despite them having a good business. Your likes of your Ultas, your Weight Watchers, really just to see which are the sleeper stocks that I want to be holding leading up to the next 1, 2, 3 calls. So guys, I hope you found the video to be useful. That's the end of the video. Leave a comment if you have any questions, and please share this video to anyone else who might find it useful. And just a reminder, guys, if you want to sign up for Hatch, the link in the video is below. Deposit your first $100 or more, and then you get $10 free credit. Until next time, happy investing. I'll catch you in the next video.